orbit. It is Thursday, March 28th. It is Expiration Thursday for the week, and that is because markets are closed tomorrow for the Easter holiday. We are unchanged on the day, a very slow start to this Thursday. SPX up about 3 points right now. It's been dancing around this 5250 level. Keep an eye on open interest in these strikes today. And we're going to go in there and you can see the 5950 level. We're looking at an open interest of about 9,000. That is more than the surrounding strikes. To the upside, you see that 5275 level. We're looking at the calls right now. If we go into the puts, we're going to see something somewhat similar. The puts, you actually have a little bit more open interest to the downside in that 5245, 5240 level. Nothing massive here until you get down to 5200. You can see those 24,000 open interest on the 5200 puts. And that is where we bounced the other day. Now, it's been a fairly quiet week as far as beginning to end. We are up slightly on the week, but we've had a couple of late day moves into the close, maybe 25-point moves into the close. Speaking of those kinds of levels, right now it's 52.65 to the upside on the expected move and 52.35 to the downside. So that is pretty tight. That's about 15 points in either direction on SPX. And again, that is because of that very low vol. Basically, options traders are positioning for a 5250-ish pin at the end of the day. Whether that's true or not remains to be seen. And it's really that last hour where we've seen some of that movement where it could take out those kinds of levels and traders could be stopped out at those kinds of levels. Going to QQQ, we've got same thing. It's about 20 IV on the day, just a 0.4% expected move, which is not that much. You can see where that lines up with over yesterday's highs and lows. If we go out to the weekly chart, Qs have traded in a fairly tight range. It's actually down slightly on the week or about unchanged. Checking in IWM, IWM's had a good week. We are up at 210, and this is, again, we're looking at IWM. Is this a breakout of those highs? You can see this, we've had a couple of attempts in IWM to break out. This is very interest rate sensitive. The expected move for the rest of the day in IWM, about 0.5%, that's 23 IV, again, pretty low. And looking out to next week on some of these, we've got just under about a 2% move in IWM. That is about 17 vol. Let's look at that in SPY. Out of the holiday, there's a very low volatility. That's 10 on the IV, and that just gets you barely above 1%, maybe, call it 1.1, 1.2% right now. Have the PCE number tomorrow when markets are closed. That will be an interesting thing into the close today, because options, which would normally go into a 3-day weekend with a decline in volatility, as Mondays, traders don't want to be caught with a lot of theta and decay over a 3-day weekend. And so Monday's options would tend to get compressed into the close. That may be a little different today with a big number coming out tomorrow, where Monday kind of has to account for that. Something to look out for is that maybe those Monday options don't have a normal compression into the close. And they're already quite low to begin with from a volatility standpoint. So something to look out for if you are the type of trader that is already positioning for next week. You have low volatility that might not see the normal decline into the close because you do have an inflation data number coming out tomorrow. SPX and spin up an iron condor there. And this is just not that the iron condor is necessarily the trade for every day, but this gives you a sense of where you would be call spread, put spread, levels wise. And so let's go in there. And we've got 52.40 to the downside. And of course, that is quite tight, even if you were the type of trader looking for a 52.50 type pin on Expiry Thursday. So let's take it and widen it a little bit and we get down to 52.30, and you're already below $100 max gain. So again, this is the type of trading where you have to be careful just on outright expected move iron condors, because they are even at this low vol, and even if there is low realized vol and a lot of gamma around these levels, you still have to be careful for those 15, 20 point moves intraday that we've seen a couple times this week. And then perhaps you do that at the extremes, and of course, legging into credit call spreads, credit put spreads. As far as what's next in the market, you have very low volatility. So if you're looking out a couple of weeks in SPX, we're looking at vols in single digits going out here. This is the 1 month chart. So positioning, hedging, positioning directionally, you're going to get very close break evens on debit spreads, call spreads, things like that. And that is the true for individual stocks as well. Let's just go into Apple real quick and check that out. Going out to the 1 month chart, you can see where these expected moves are, and look at these types of moves over the last month. The expected move is much less. Going to a 3 month chart, you can see it here, and then you get out to sort of earnings season again. Positioning directionally, you're looking for Apple to perhaps bounce here. You're going to get very close break evens on debit spreads. If you're looking for Apple or any stock like this or a chart like this to break down, you're going to get very close break evens on debit put spreads. And perhaps it's the type of thing where you want to set your short strike beyond the expected move. If you're buying at the money or near to the money, perhaps that's something where you go, let's say we went out and tried to catch the next earnings, and we go in here, we see our break even is about 174, which is not far away, less than $3.50 away. So perhaps that gives you an opportunity to kind of take that short call a little bit higher, give yourself that kind of room. That's a 20 wide. You could go 15 wide. We're looking at the 170, 185, and you're just barely above that expected move out to that date. And that's the bullish version. Of course, the bearish version would be very similar.